Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be going over, if you couldn't tell by the background, candle by candle market psychology. The idea of this is that we're going to break down each individual candle bar by bar while we gauge what is going on in the underlying, what psychologically could be happening for the bulls, for the bears, what are traders thinking at any given moment. And we start off here, and if you're not sure what's going on or why it looks like this is Labor Day weekend coming in after Monday had an early close, and then we're going into Tuesday with a heavy gap down, just so there's some context. So over the weekend, there was a little bit of back and forth, but Labor Day, or this Monday day here, kind of doesn't exist in a sense. It kind of does, but we gapped up and then we're gapping away from it. And in and of itself, that type of gapping would be what you would call an island gap, right? Something out of the stock market, bigger time frames and all that fun stuff. But the way that it's moving around here and the way that it's kind of set up is demonstrating that we've got some halfway decent an initial bearish pressure out of the gates, right? The assumption would be that the bears are going to try to get this to continue lower. We've broken down not just with a small gap down. We're opening with a monster gap down and again, kind of with an island gap on the top that we're leaving behind. So the fact that the market is opening up with a really, really strong bear bar to the downside, it would make a lot of sense that we're likely trying to gun for an earlier area of support or resistance. In this case, support, where we likely found earlier sellers who were stuck. We're breaking underneath that. We're closing underneath that. Really good support. So the next spot really is just going to be down here, the bottom of the wicks, the closes, etc. That's about it. So we'll kind of wait and see what they want to do here, but the bears are looking very, very strong. And there will be some sellers who sell just the first candle of the day, given how aggressively bearish this is to the downside. Of course, the risk would have to be above the candle's high, and the reward would be on a scalper's perspective. It couldn't be anything else. But other than that, we're just kind of sitting and waiting. We do get the bearish continuation to the downside, and a lot of sellers are going to like being backed up by this extra continuation. And if we look at the overall volume that's backing it, we've got the market which is closing underneath the POC, which is back at 45.25. Everything is suggesting that the sellers should keep things going here. But again, we've only got 2 candles in. Usually it takes like 15 candles for them to make up their mind on what they want to do. The next candle is going to be a nice bull bar, and that bull bar is right back to the break-even point. And this is where things are a little bit interesting because, well, the POC is still above where the market is. And even though this looks like a really strong bull bar, all of the gapping that's going on behind the scenes from close to open is down. We have a down gap here. We have a down gap here. Sure, it closed up, but there's an immense amount of bearish pressure that seems to be kind of building up behind the scenes here. And after closing 3 consecutive bars down relatively aggressively, the third bar trying to reverse up, if the bulls can't show up to the party, it's likely that the sellers take this further. And we do know that sellers have downside objectives that are a little bit further towards the 45.20s. Now, beyond this, beyond the third candle, we need to wait and see. Do the bulls trigger anything in? If they do, we have to assume that they're going to be low probability traders. So if they do trigger in long, they have to be able to fit in at least a 2-to-1, which it does. Although preferably, I would like to get a better entry. If the longs were trying to take over, 24 quarter gets the target in ahead of the open. I still am not a huge fan of the long. I think the bear side has a lot more context going for it, but we'll wait and see here. It's still looking kind of on the teeter-totter. Well, it's not looking like it's on the teeter-totter anymore. It's fairly obvious that the sellers have a strong breakdown, and if sellers were looking for a scalper's objective lower, obviously they've hit that objective, but let's just get it on there. We are closing underneath it, which is important information because that demonstrates that this move may not be done. There may still be more strength in this in the overall grand scheme of things. Let's look at volume. POC is still way up here. Nothing has changed. Sellers have been target satisfied. But realistically, if this does want to break further, the next objective is 2-to-1s. And that's way down here at the 45.08. That's a big, big move. We'll see if they can manage to get something like that going. But right now, we have to assume that the sellers who were scalping have been satisfied and they're being shown, hey, you might want to hang on. More bearish continuation, although the candle gapping is gone. We did have down gap, down gap, down gap. Now we don't have any gapping. So this could be demonstrating short-term profit taking. That would make sense. We saw the earlier scalper's target, which if you don't remember was right here. We did close underneath that, and the fact that this entire candle has been underneath that, it makes a lot of sense that sellers are still trying to get things going. I mean, we've got some downside candle gapping between the bottom of the bull bar and the bear bar. That would suggest that there is potential movement all the way down to at least 45.15. And, you know, again, the wider targets are still way the heck down here at 8.25. Strong bull bar to the upside. Now, this looks incredibly bullish, but all they managed to do was just shut down the gap. That's it. This isn't really proving a whole lot per se. It's only kind of the first time the market's been able to trigger up. This time never actually triggered back here. So as far as the bull momentum to the upside, this is kind of only a first long. It doesn't really make sense for the buyers to be here on this one. And if they were, they'd likely be scalping it from down here. So if that's the case, and we were looking at maybe buying above that bear bar, then scalpers' objectives would be, I mean, that'd be the most. Like, you just can't expect much more than that. And even then, you know, if they are looking for a bull engulfing, they were probably able to get a slightly better entry, which would assume down to the 45.20s. Basically, what this means is that even though it looks like a really strong bull bar, there's not a whole lot of upside potential in it, really. It's kind of it. This is perfect. The bulls ping up. They hit the objective to the tick. If you were lucky enough to get filled, I know for a fact I would not have been. But there will be some bulls that did. Maybe market have touched orders. I don't know. But they're technically, you know, their targets got filled, and the market's starting to move back down. It could not close underneath the break-even point, but this is kind of that resistance that we were expecting from the sell side. And, well, they're showing up to the party. This is looking like there might be some more of that downside action. And now we have a measured move that we can use too. That gives us a downside objective right now, right about here. Nice strong bear bar to the downside. If the bulls did not get their targets filled up at the top, they were likely stopped out, which is going to be potentially fuel to the fire. If we look at the overall volume structure now on this new breakdown, we've got the POC, which attempted to rotate up at 45.20, and we're now closing underneath it again. We know that the sellers have major downside objectives that are still hanging out here down the 45.08 quarters, and the bulls just got shut down. We're seeing it slide away. It's getting progressively worse. The bulls are getting more and more and more stuck. Downside objectives are still up in the air. They haven't been hit yet. If we go a little further forward, the POC is still hanging out a little bit in the back, but overall sellers still have a lot of reason to believe that we've got continuation down. Inside bear bar, nice and strong, closing on its lows. We did get another, not really any candle gapping going on, but there was some candle gapping over here, and over here, and over here. So they're still maintaining that downward pressure. That one was one bullish gap inside there. The rest of them were bearish. And with this kind of inside bear bar with that giant wick on the bottom, we kind of have to ask ourselves, like, well, wait a minute. Is everybody out already? Did traders already exit? Are they exiting? You know, what's going on here? Are we continuing? Are we stalling? Is this a pennant on a faster time frame? What's going on here? But it still looks like the sellers are maintaining control. The POC's way up at the top. No reason to be concerned yet. That makes it a little bit harder. We've got a bull bar back to the upside. That's not the first time around, but this is the second time the market is triggered to the upside. That means that from the top, this would be considered a second long. The signal bar being this big bear bar here, not the inside bar. We did have some gapping to the upside, and if there was any bear gapping to the downside, they've kind of finished it off. One bull bar up, that doesn't really prove anything. That's not going to hurt anybody's feelings. Realistically, a lot of sellers, that's what happened the last time around. One bull bar is about all they get. And sure enough, one bull bar is all they got. We got an inside bear bar, and this is a perfect opportunity for sellers to get a breakout attempt to finish the job. We've got the sellers, although this candle could look a lot better. I wish it was closing down here. But sellers will sell underneath that previous move, and remember, the signal bar being the high or the extreme, which is the bull bar low. Sellers will be looking for a continuation to the downside to get this going. Now, as far as this continuation, remember, they've got to get underneath the bull bar. That's the actual signal. Getting underneath the inside bar is an inside, it's an early trade. Doesn't mean that it's bad, but it does mean that you run the risk of being wrong and then you get ran over. The actual breakdown would be underneath the lows, and if they can break underneath that, then they're looking at likely, a scalp is going to be about all they've got. And that just fits. Yikes. So, I mean, realistically, actually a scalp doesn't fit. Yeah, even a scalp doesn't fit. So this is one of those rare occasions where it just makes more sense to sit on hands and not do anything. Nothing fits. It doesn't fit the risk tolerances for anything. There's no reason to take a trade here. It seems like everybody agreed. Giant sideways wiki doji bull, whatever you want to call that thing. If any shorts did take the short underneath that bear bar, this bull engulfing bar, even though it is kind of weak, if it goes above it, is likely going to freak them out a little bit, enough to cause some exit. And that could be that second long attempt that the bulls need. They needed this trap to get things going. And having that bull attempt to try to rally back up, maybe even make an attempt back up to the open, get back up to settlement, huge V-bottoms. Wouldn't be the first time that the Nasdaq's done something like that. These are the kinds of candles that they need to get it going. But remember, the POC, where is it? Has it changed? Now, if we look at the POC, it hasn't really changed a whole lot. 45.20 is still there. That means that that's going to be a zone of resistance. And looking at the time frame, it's 10:35. We might have a slight bullish continuation, but it's going to be tough to get above those 45.20s. Nice bull continuation, gapping from candle to candle. We can see a lot of wicks on the top, some weakness, not a surprise. Inside bull bar will speed up a little bit. Nice strong attempt. This might be the pop that they get up to those 45.20s to finish the job. Maybe even let these earlier longs out at 21.50 if they're being nice enough. Nice bull bar up, tests the POC. Now remember, this is where shorts will start building into the downside. Longs know that they haven't really had an opportunity to do anything other than get stuck. And, well, they haven't had a POC shift, and it still hasn't shifted. It's much more likely that these traders are exiting, and if we start seeing the market stall out, there could be some clues here. Remember, bulls are still stuck up here. If they can get it a little bit further, maybe they might get a nice little pop to let them out. Came close, but closed back underneath the POC. Yikes! If this starts triggering to the downside, I doubt there are going to be any bulls on the planet who are going to want to sit on this for too long. Okay, we get a bull bar closing back to the upside. They are closing above the POC. Let's move it a little bit further forward here. I know it's going into 11 o'clock. The POC is there. Let's see if they can trigger. This is where the bull bars need to show up. This is where they need to keep this train going. That's not it. Big old bear bar to the downside, likely a sign of a little bit of disappointment, really, and probably going to cause a slide back down to maybe let these earlier bears out down at the 1350s. Let's see if a scalp fits underneath that. It's a really gross-looking bear bar, but if we can get a scalp to fit inside there, it does. That would make sense for the sellers to try to get more continuation lower. Bear bars triggering into the downside, and they fill all the way down. We're tagging down into where those earlier shorts were stuck. Let's see how they want to respond. Do they get out of break even? Ooh, okay. Nice little break even bounce here. Inside bear bar, do they follow it through with another push to the downside? Remember, that 2-to-1 objective's not too far away. That is not the kind of follow through that they want. We've got a higher low and another higher low with bears getting stuck. Any shorts who are possibly stuck in that, well, they're going to start rotating back to the upside. And the upside's a wide open door. I mean, it fits a 3-to-1. It almost fits a 4-to-1. Longs have a lot of upside potential here where the market could start triggering off. Ooh, nice little break-even pullback. There it goes. Nice rotation up. Grabs the 3-to-1. Big rotation all the way higher. Crazy overall movement. Even after a big holiday, you've got some really, really nice back and forth rotations that you can utilize to your advantage. And it offers up just kind of an important thing to note here. When the market is disappointed, remember, the downside objective was a 2-to-1. And they missed it. They missed it. They missed it. We just did a video on things being disappointed. Right? When they start missing it over and over, that usually causes a reversal or a pause or something to change directions. And this is another great example of that. As always, hopefully you found this useful and interesting and entertaining and all of that fun stuff. If you have any questions, feel free to shoot me an email and I can get those covered for you from there if it's a little more detailed, jhb@ssftg.com, or if it's a little bit of a shorter one, you can drop them in the comments below. Either way, enjoy, rest up, and we'll see you in the next one. Thanks.